Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. Measuring the revaluation of XRP's price based on speculative markets makes no sense. The speculative market is over, and now the market that will last 70 years is beginning. The utility market, the new financial system. Raoul Pal said that Bitcoin 4-year cycle is now dead, and it will go parabolic soon. He says it's coming. Let's hear what he has to say.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. The 5.4-year sine curve, 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
Well, according to Raoul Pal on those charts, he's saying the top's going to be in the middle of 2026. We'll have to see how that plays out. That's what a lot of people are actually calling for. Ondo Finance, clear signal from the New York Fed. Any monetary instrument issued on such blockchains can achieve borderless global reach. In a new analysis, the Federal Reserve Bank of New York highlights the structural advantages that open blockchain rails introduce to today's financial system. Blockchains already process trillions. Permissionless rails enable global access. Composability unlocks new financial workflows. At Ondo, we're proud to see the New York Fed highlight the capabilities of open rails and their role in expanding access to U.S. markets, a principle we have championed since day one. Is there going to be a massive government stimulus, and Fed moves are about to reshape the economy and markets? Raoul Pal and Julian for shooting the shit. Round 13. Tax breaks, balance sheet changes, and stablecoin adoption set the stage for growth and innovation.
Try not to mid-curve and get in every detail. There is a massive fiscal stimulus coming where they're going to forgive tax on tips and all sorts of other breaks. They've already made announcements that they want to do something about the SLR. They've already met with the banks to say, we understand there's a problem with the standing repo. They've already said they have to get rid of QT. They've already said the balance sheet will mathematically grow somewhat. We know that they've got to drain the TGA by a certain amount. We know that they want to win the midterm elections. We know that they want to get through the Clarity Act or whatever for crypto. We know that the Stability Act allows people to build on stablecoin rails, which drives vast amounts of use for underlying crypto. We know that inflation is not an issue right now. We know that the government is going to replace the head of the Federal Reserve to get a more dovish Fed. We know that they want to push the liquidity provisions off the Fed and the use of the balance sheet so that the Treasury can print money via the banking system to finance the debts to make all of these issues go away with the funding markets. So when you stack all of that up, and we know the business cycle is picking up, you end up with just an extraordinarily powerful backdrop.
BIS, Bank for International Settlements. Tokenized money market funds are a collateral asset and savings tool. However, unlike stablecoins, they provide money market returns and regulatory protections as securities. And warning, Rob Allen just confirmed 50 plus enterprise use cases ready to go live and says the next year will surprise people. If that's true, HBAR's path to historical numbers is already forming.
Looking ahead, Rob, what does the future of enterprise adoption on Hedera look like? And what important point have you not touched on yet?
I think we are going to be very surprised over the course of the next year of that a true adoption happens. We have many use cases, so 50 or more use cases that I've been tracking over the last couple of years, many of which have been waiting for kind of a regulatory friendly environment to deploy into. I think we're past the experimentation stage and the fear of missing out and the competitive nature of this space is really going to drive some of this adoption forward. I think we'll be very surprised around some of the use cases. So I mentioned
the Shanghai silver crisis. Inventories could be empty in just 9 weeks. Shanghai Futures Exchange silver inventories are collapsing at an alarming rate. Current drain rate suggests completion in just 9 weeks. That's the end of January 2026. No silver left in Shanghai vaults. The math doesn't lie. Annual mine supply 850 million ounces. Industrial demand 1.2 billion ounces. Annual deficit 150 million ounces. London's free float 170 million ounces. The reality, the entire available silver inventory in London's vaults would last only 14 months at current deficit rates. And that's if no investment demand exists. When Shanghai hits zero in 9 weeks, the entire global silver supply chain faces unprecedented stress. The physical market is screaming what paper markets ignore.
At the Shanghai Futures Exchange, official data shows a relentless drain. Just 9 weeks until inventories hit zero. End of January. Empty vaults. No silver left. This isn't hype. It's the trajectory from current outflows, with vaults already down to critical lows like 1,368 tons, 44 million ounces, in early January, and 7 straight weeks of depletion since. Demand surges from solar panels, electronics, and strategic reserves, outpacing supply by hundreds of millions of ounces annually. No replenishment in sight. 9 weeks. The clock's ticking on Shanghai's silver apocalypse. The squeeze is here. Physical reality, not paper games.
Now, this is not financial advice, but you probably should be looking into investing in some silver right now. Tom Lee says year-end rally is still in play. Tom Lee expects a strong move into year-end even after one of the toughest 6-week stretches portfolio managers have seen. He points to 3 major catalysts. Seasonals point higher into December. A dovish shift from the Federal Reserve is coming. 80% of fund managers are still trailing the market. When seasonality, policy, and positioning all line up, the squeeze can hit fast. Crypto and equities could be setting up for exactly that.
For a really strong rally into year end. And I know we just came out of a pretty terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people have lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. It's really a 5 to 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. As we're doing work into next year, and I think earnings visibility is going to be really good.
And last up, 60 years of crypto in one sentence. Everything before Bitcoin failed. Bitcoin proved digital money. XRP, XDC, HBAR, and QNT proved digital settlement. You're watching the final form of consensus, the evolution every bank, regulator, and institution is now converging on. Bitcoin was the spark. XRPL is the settlement rail. XDC is the trade finance engine. HBAR is the throughput layer. QNT is the interoperability glue. This isn't a trend, it's the end game, my friends. Well, that's what I have for you, folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.